Welcome to the Inside Track on Real Estate with the Dekker Team. And today I got the special privilege of having my wife with me.
That's exciting.
So I'm Ken Dekker.
And I'm Yetta Dekker.
And we form part of the Dekker Team. And today we're going to talk about one of those things that, well, people love to hear. They ask, how's the market?
All the time. We always say it's our top asked question, right?
Yes.
How's the market?
Yeah. And the second one is, how's your business doing?
Well, or what's it like to be in real estate?
That's true.
Fits right into that whole business question.
So today we're going to talk about the market as a general. We're going to break it down into some areas of the city. And we're going to say a lot of numbers. So it could get a little...
Exciting.
Exciting, yes, that's the word I was looking for. Could get a little exciting with some of these numbers, and we're going to try to interpolate them so that you get an idea of what's going on.
Yeah, what it really means. So we're going to talk today general market as well as a few specific areas, and then of course we are hoping to be able to give you details for your specific neighborhood. So if you have a specific property that you are currently living in, or even when you're considering purchasing or an investment property, doesn't really matter, something where you want to be tracking the value in that community, simply give us a call at our office, 613-860-4663, 860-4663, and we'll set you up on a custom search. Meanwhile, in general, right now we are looking at statistics up until the end of...
Well, actually, some of them are for the month of February, and some of the stats I took right to March the 12th.
Okay,
March
so
12th.
March 12th is, so when we look at 5,844 properties in the freehold category on the market right now, that is as of almost the end of the second week of March.
Yeah, as of March 12th.
Right, and the average list price on those homes is just over $440,000.
Yeah, which is interesting because our average sale price is around $370,000. So that's not saying people are getting $70,000 off of the list price.
No.
What it's saying, because actually list price is running around 97% on the board average. Dekker Team runs about 2% or so higher than that. So that's good. It's good to know that your team, if you've chosen the Dekker Team to sell your house, has a track record of getting over 2% higher list to sale price than the average. And that's the average. So just make sure you're interviewing the right realtor for the job of selling your property. So what it does mean is that more lower priced properties are selling than higher priced properties. So that's why our average for 2015 for the month of February was $370,227.
Right.
So there were 798 properties sold, and it was a 3.2% increase in the number.
That's for the month?
For the month.
For the month of February.
The coldest month in 138 years or something like that.
It was very cold, wasn't it?
It was very cold. And realtors were out there selling houses. Now we're talking freehold. Condo is a whole nother story. We're going to hit condo after. But we're talking freehold houses right now. Actually went up 3.2% in sales, and price February over February 2% increase. Right.
So that may be that your home went up 2%, and it may not mean that at all. We're just looking at averages. So the average home that sold in 2014 in February was $363,000 versus $370,000 this February. And there were 773 homes sold in February 2014. Yep. So slight increase, 3.2%. That's good year over year.
Yeah.
Yeah, because we haven't been seeing a ton of that.
No, and to see an increase in an extreme cold month, I thought that was pretty cool. Now, the other thing you can do is you can not just look at month over month, like February over February, but we can look at the year over the year. So I went from March 12th back for 1 year, and then back another year.
From March 12th the year before. So March 12th, 2014 to March 12th, 2015.
Right.
And then also in comparison to March 2013 to March 2014.
Yeah, so really to see a year chunk, what kind of changes are we having, what's the average? Because when you start getting a big sampling of data, you can start to get a better sense if the market's going up or down.
Right.
So for a whole year, this last year, 12,378 houses compared to 12,369. So virtually no change.
In the terms of number of homes selling, and that is
9 houses in a whole year.
Right, so none, essentially. That's a little bit less than, say, we had 5 years ago. We have been selling a little bit less, almost year over year, pretty much, over the last little while, and yet we're now holding our own.
Yeah.
So that's fantastic.
Now, prices were up slightly.
$2,000.
Yeah.
Yeah.
So $368 average price compared to $366.
Yeah.
So interesting that in February our average sale price was $370. That's very strong.
That really is. When you look at year over year. That's an awesome indicator. Now, it doesn't, as I said a minute ago, it doesn't necessarily mean that your specific home has gone up. It means the average home that is selling is that price range.
Yeah.
So it doesn't equate quite to the same thing as saying my home is worth 0.5% more or 2% more.
Right. So now we got to look at, okay, how many months of inventory do we have compared to, in inventory? Because that will tell us roughly. So the end of February was 4,700 homes for sale.
Which is a lot for the end of February.
Yeah, but interesting, by March 12th, 5,844.
True.
That means
climbing.
We listed for sale in 2 weeks. The real estate industry listed over 1,100 houses for sale.
1,144.
That means our fellow realtors are busy out there putting houses on the market.
Absolutely. And if we now go back to 2011, just sort of go back 4 years to take a snapshot of what was going on in the inventory then, the same date 4 years ago, there was only 3,100 homes on the market.
Right. Yeah. So that's a 51% increase in number of houses, and yet sales have not increased 50%.
Well, for the most part, they've actually gone down a little bit.
Yeah.
Yeah.
Or stayed flat. So there is presently 5.9 months of inventory, excuse me, at the end of February.
Right.
Based on the year's sales.
And as far as how many months of inventory, if we have from 0 to 3 months, then we have very much a seller's market. From 4 to 6 months, we have a balanced market, and from 6 months and on to 9 months, we have a buyer's market, and then from 9 plus, we have a depressed market. So it's sitting right between that balanced and buyer market. So it's going to be depending on exactly where you're located. In lots of communities, in fact, it is very clearly a buyer's market. And in other communities, you could even have in specific price range, specific type of house, a seller's market. I'm in Westboro right now helping some folks buy a property, and it is definitely in that community right now for what they're looking for, in the price range they're looking for, a seller's market.
Right.
So it does vary even within a neighborhood depending on the price point. Never mind the whole of Ottawa has lots of flexibility or variation in it, might be the right way to say it. So as an overall statement, we're right at the cusp of a balanced moving into a buyer's market.
Yeah, and so what I thought would be interesting, Yetta, is that we'd carve...
What was that, Ken?
Well, we'd carve up the market, because that was general,
Right.
the whole Ottawa real estate board.
Right.
And so what I did was I carved up kind of the east end of the city,
Right.
417 split east,
Right.
and then I carved up the inside the Greenbelt area, and then I did the south of the Greenbelt, kind of the Barrhaven, Riverside South area,
Right.
and then I did west, so the Canada, Stittsville, Richmond, kind of
Right.
west of the
And does that
Greenbelt.
go right out to the edge of the board, to the Ottawa Real Estate Board?
I didn't go right to the board, because the board actually goes all the way to Renfrew.
I know.
I just did more like what's happening in our city,
Okay.
but
So really what falls within pretty much the city of Ottawa in the geographic areas that you just described.
yeah, the high density areas.
Right. Okay. Perfect.
Okay, so if I look at splitting it off east of the 417 split, interesting, sales were down 4.7%. So we went from 1,671 sales to 1,592. So slight decrease in the
and
sales.
that's year over year.
Year over year.
That's a whole year over a whole year.
Yeah, I didn't do just the month. I did the whole year.
No, that's fine. And for splitting up in areas, I think the conversation year over year is a much more valuable conversation.
Okay. Price was up 1%.
Okay, so that's interesting.
Pretty close to what we're experiencing on a whole.
Right.
Now
inside the green belt,
Yeah.
you also did year over year, or we did year over year, but you do know Ken sits at the computer and does most of the number crunching, and that's awesome. So for 2013 to 2014, we had 2865 home sell, and then this last 12 months, we had 2803, so down really just 2% in terms of volume. Right? And then the prices were up about 1.8%.
Yeah, so interesting. Slight decrease in volume. Probably the highest increase in value was in that inner core area inside the green belt.
Right, which we kind of knew.
Which we kind of expect.
Right.
Yep.
That is probably more typical than not.
Yeah. Now, here's what's interesting. So both those areas had decreases in sales. Not significant, but a decrease in sales.
Yeah.
The other two areas had an increase in sales.
Yeah, that is interesting. Can you explain why?
Not at all.
Okay. Well, so...
Just it's a growth area, and people are wanting to live in the West End, I guess. It's only a slight increase, 2.6% for the West End. But what was really interesting is the price dropped in the West End. Now, it could be they're being more realistic on their pricing, and so people are buying there. And the other area may not be quite as realistic. They're holding off trying to get a higher price, so fewer people are buying there. Right,
that makes sense.
Yeah.
As a potential reason. So we had 380 as the average in 2013, 2014. And then 2014 to 2015, it was 379. So really, essentially the same, down 0.3.
Yeah, but what's really interesting, exact same pricing as the East End. The East End has historically been less cost, right? A little less cost to live in Orleans than to live in the West End. But average sale price is within $1,000.
Yeah, so essentially the same. And then now I think here's the real surprise. South of the Greenbelt.
Yeah.
So there we've had an increase of 3.8% of homes sold. So that's the largest increase in all the areas. And we've also had a decrease in price, though, of 1.5%.
Yeah.
Except what's the interesting piece?
Well, they're still more expensive than the East or the West.
Right.
So south of the city is demanding a little bit more money, but it's come down in it's coming down in price because there's kind of that equalization pressure, because
there seems
a lot
to
of
be.
people will live anywhere in the city. Like some will say, I don't care. I'll live east, west, south. Where's the best value to buy a home?
As long as this is the kind of home I'm looking for and this is the type of yard and these are the things I want. So the only area that's more expensive to live in as a whole than the South End is within the Greenbelt.
Inside the core.
Yeah. So that's interesting because it hasn't always been that way.
Yeah, and it continues to rise. The inside the Greenbelt continues to rise at the highest rate. We're not talking a lot of difference, 1% to 1.8%.
Right.
But still, it adds up over time, and that's why you're seeing prices inside the Greenbelt almost $100,000 more on average than the prices outside of the Greenbelt.
Right, and you're not even talking the same kind of home, so you're buying a different product depending on what community we're talking about.
You might even be buying an inferior home.
Well, you are.
Size-wise.
You are.
But you may be buying a better lot.
Maybe not.
Maybe not, but you might be.
Well, yeah, not necessarily, though. It's really just location, location, location. Three things to think about. So if you're just joining us on the Inside Track on Real Estate today, you're with Yetta Dekker and...
I'm Ken Dekker.
Yeah, you are. And so we're talking about general stats and activity for the Real Estate Board of Ottawa-Carleton for the most part. And we've done freehold, and we're going to start chatting about condos in a minute. So if you missed the freehold portion, you want to go back to the first half and have that conversation. These are stats for 2013 and Well, you did it at a weird time. It's very confusing.
Really?
Yeah.
I've confused you?
Well, yeah, not the first time.
Well, I'm going to say that's good, because this is one of the few shows that I get to feel like the expert sitting beside you, because when we talk numbers, I made them up.
You didn't make them up.
Okay, I pulled them off the computer.
Yeah, you used real statistical information.
Yes.
Uh-huh. If I did it, I would have made them up. No, that's not true. I actually do know how to do this too. So anyway, let's move on.
Did you know that 87.2% of stats are made up?
Yeah, and you just made that up.
Yeah.
So, okay. So, condos. Let's look at what's happening in the condominium market. So there's 1,791. So the better part of 1,800 homes on the market today at an average asking price of $300 and pretty much 15,000.
Yep.
So we could say 315. And in February of 2015, 156 were sold.
Yeah.
Which is kind of sad. I think it's really sad because last year there was 188. So where we made up a little bit in the freehold, we've lost more than what we made up in the freehold in the condo. So we're down 17%.
Yep. In condo
sold
sales.
in condo sales. Whew.
That's a lot.
That's a lot.
That's 1 month over 1 month. So February over February.
Right. And that's only 1 month. So we shouldn't get too excited until we start looking at year over year.
And we could blame it on the cold weather, but then why is the freehold?
It's worse to look at a freehold than it is a condominium. I mean, a condominium townhouse, maybe not. However, for the most part, it's...
So we can't blame it on the weather, because the freehold it bucked the trend, right?
No, it did. It absolutely did.
Now, what's a little hilarious is the average sale price was up 4%.
I know.
I think that's skewed a little by maybe the type of property that sold that month, because condo has one of the biggest variations in pricing.
Yeah, it does. Well, I mean, so does freehold, I guess, except...
And when you have a smaller sampling, 800 homes sold compared to 150 homes sold, there's one big one that sells, it can skew the number faster than when you got a large sampling of data.
Right.
So let's look at the year. So I went, that March 12th date again.
Yeah.
Back
just to confuse me, if he's not...
Well, it was the most current data I could do.
I know. If you want to write in and complain about his statistical analysis on a specific day that's confusing me, and if it's confusing you, I'd welcome that. So you can just email Yetta, Y-E-T-T-A, at dekkerteam.com.
And she promises not to forward it to me.
Actually, I will. Anyway, Y-E-T-T-A at dekkerteam.com, and I will forward it. Or if you want to send it directly to Ken, it would be Ken at dekkerteam.com.
Yes, and if you'd like to say I do a great job, I'd love to hear that too.
Would you?
Yeah, because I could use a little encouragement once in a while.
Oh, you know how you can tell you need encouragement?
Yes.
How?
You can tell that people need encouragement if they're breathing.
That's right. And are you breathing?
And if they've just stopped breathing, they probably need a lot of encouragement. But if they haven't been breathing for a long time,
doesn't matter?
It doesn't matter.
Okay, anyway, so back to statistics, my favorite thing. So year over year, what's happening there?
All right, so condo market went, prices went up a little, 0.3%. 0.3.
Average. Yeah, so basically the same. So basically 262, 263 is what we're talking about.
Yeah.
Yeah. On average.
Not a lot of change.
No.
Sales, interestingly enough, year over year, down 11%.
11.2.
Yeah.
That's kind of scary. And month over month, it was 17%. So it always almost sounds like it's trending worse.
And that year over year, there would have been more condos come on the market because the builders built. There's been buildings coming on to the market that the builders are just releasing the condominiums, right? That they've, people have waited 2-3 years for them to be built. Now they're built. These the apartment-style condominiums are starting to flood the market.
Right, as a resale product.
Yeah, there's another one, that's starting to release their condos coming up shortly. It's the Gotham project. So it's going to add more inventory, and some of those investors that bought those will want to resell them. and it's going to add more.
Right, because that was a pretty common thing to do a few years ago, is to buy a property with the anticipation that by the time it was built, 1, 2, 3, 4 years down the road, that there would be a higher demand for it than there was when you purchased it, and that the price would have gone up a fair bit. Yeah. So there was a fair bit of that kind of purchasing going on, hence why rather than moving into it when it's built, it's actually coming onto the market and causing a little bit of a inventory Glut, yes. Okay.
Yeah, I call it a glut because we went from, when I looked at the March numbers, 1,700 in 2015 from 825 in 2011. That's 106%, so a little over double the amount of inventory.
Right. And if we just reflect back to freehold, that was 51%, and we thought that was terrible.
Yeah.
And now we're looking at 106%.
Yeah, and what's interesting is I talk to realtors, that we're referring clients to in Kitchener and Guelph and Toronto, and those areas, they're in a seller's market.
As a whole.
They do not have the inventory.
No.
So I'm not quite sure what's going on with Ottawa, because it's a great city.
Well, it's usually named one of the best places in the world to live, year over year.
So I'm just not sure why we're creating so much inventory. So it's interesting.
It is. So now we've split up the city exactly the same as we did with freehold in the condominium market.
So before we go there, though.
Oh, come on. I like this part.
Is it a buyer's market or a seller's market for condos?
Well, it's clearly it's actually a depressed market because there's 10.9 months worth of inventory.
Okay.
So it's not even a buyer's market as a whole. Now, don't get too excited about it because it does look at what price range are you in. Mm-hmm. So as an average statement, we're saying 10.9%. 10.9 months of inventory, so basically 11 months of inventory in the condominium market based on how many are selling in a month.
And you're calling that a depressed market. I'd call it a depressed market for our Ottawa stable market that we've had.
Yeah.
Last 10 years, I just did the calculation, and we've averaged 4.3% for the last 10 years. Condo and freehold combined, 4.3% growth in value, average value, year over year over year for the last 10 years.
Right. So we're talking Ottawa.
So pretty stable.
It's an incredibly stable market.
Because we compared to some areas in the States where the inventory went crazy and they had 24, 30 months of inventory.
Right. Well, I don't even know what you call that. You call that short sale, which we don't even have here anyway.
That was
that was just terrible. So, and the reason not to get too excited about the fact that there's pretty much 11 months worth of condominium inventory is because it depends on the price range you're in and the community that you're in. So that's just a blanket statement. So don't get too worked up about it. Have us look at your specific area, because you may be sitting in a position where, in fact, it's a balanced market. There's not too many left that are seller markets when it comes to the condominium market. There are a few, though. Mm-hmm. So let's move on to the other communities.
Okay, so let's look at the East again. 417 split and East.
Yeah.
Not a ton of condos in there. They're mostly townhouse style. There's a few stacked or style or whatever. A couple apartments, but not a ton of apartments. So last year 491 compared to 547 the previous year. Mm-hmm. So that's a 10% decrease. So following pretty close to the city average.
Right.
Difference price though was down 2.9%.
Right.
So we're seeing some downward pressure. Mm-hmm. And that's from an average of 217 down to 211.
Right.
So some decent pressure down
in
that east side of Ottawa.
Right. So west of the Greenbelt, we're looking at about 9% drop in terms of price. Mm-hmm. So
9% in the number of
inventory, and only a 1.9%. Both nines.
Yes.
9% in terms of inventory and about 1.9% in terms of pricing. And then inside the Greenbelt?
Well, I wondered what would happen there. And interesting enough, it's the largest decrease in the number of sales. Yeah. And there you have the highest apartment concentration. We went from 1680 down to 14.65 last year.
Almost 13%.
Yeah, almost 13.
That's a lot. Prices still up 1.4 on average.
Yep. So what it's saying is that people that want to live in an apartment condo want to have the convenience of being almost downtown.
Right. And its average price was $295, whereas it was $291 the year before.
Exactly.
So that equals 1.4%. So south of the green space.
Well, interesting enough, decrease in the quantity, 12.4%, so holding pretty much where we thought, right?
Yeah.
And but prices went up 2.8%.
Right.
So 230 compared to 223.
Right. So overall, the market is still stable. Still seeing a little bit of downward pressure. So the things you do in your home really matter. How it's marketed really matters. Your reach as far as reaching the public, really, everything matters more in a balanced moving toward a buyer's market than it does in a seller's market. Yes. Because there's so many of the homes that are coming on the market that are not even selling. We're talking about what's actually sold here. Never mind the ones that sat and did not sell.
Well, if you look at the inventory at the end of February, we're talking 7,500 homes roughly.
Yeah.
And in that month, 900, 850, 900 homes? 950. Yeah, about 950 homes sold. So there's a lot of people that aren't selling.
There are.
Or waiting.
Exactly. So if you want specifics on your neighborhood, you want to call us. Hopefully the show wasn't too confusing, not too many numbers. I don't know what he's thinking, but I know it's our most asked question, so maybe that's what he's thinking. Great property we want to chat with you about is in Embrun. It is a 4-bedroom, 2-story with a garage, $280,000.
I know.
Like
Embrun.
I know, that's awesome. So you're on a just over 60 foot by 113 foot lot. So you've got a fair bit of space on the outside. Nice drive in. It's nice and easy, fast, and great property. There'll be a few updates you may want to do on the home and why it's such an incredible value. If you are interested in it, or any other home for that matter in the city of Ottawa or even just outside the city of Ottawa, you want to give us the Dekker Team a call at 613-860-4663, 613-860-4663. We thank you for joining us on the Inside Track on Real Estate. And Ken, what do you want people to know?
I want people to know that the Dekker Team's in their court. You know, if you...
That was on their track.
Yeah, we're on their track too. We just want to keep them safe.
Yeah.
And if you're looking for a second opinion, maybe...
Or first opinion.
Or first opinion on value of your property, or you're just not sure, or you want to go buy a house, or you got out and you saw an open house and you weren't thinking about buying a house, but now you are, give us a call. We want to be in your corner. Really, we want to be your
on your track because it's proven performance that moves you fast. So you got to stay on the track, buddy.
We want to be your co-pilot.
Exactly, that works too.
Yeah, and so we can only do that if you reach out to us because we can't reach out and find you. You have to reach out and find us. Our number is 613-860-4663, and you'll be glad you contacted the Dekker Team.
Thanks for joining us, and we'll talk to you again soon.
Bye for now.
What you wanna do? My man is on